Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Wednesday, June 8th. My name is Todd Rich. I am with Nadex. With me, the CEO of Keep Trading Simple, Brian Caprice. Now, today it's going to be a quick hit day because there's just a couple of spots where things are really shaking. Number one, we are going to look at the yen. The yen is seeing significant weakness across the board. We'll take a look at the yen and we'll take a look at technical levels against the pound, against the dollar. We can even probably take a look at the euro, but more the pound and the dollar. But the yen, definitely some volatility there. We are also going to take a look at oil because today is the oil inventory report in the United States. And so taking a look at technical levels, oil is already punching a little bit higher. Lastly, we will take a look at equities. Equities, we're in that negative sentiment every day this week. The equities have looked to opened lower, have sold, gone down, and then completely recovered and closed higher. So we're seeing volatility in the equities. We will definitely be taking a look at those as well. All right, before we look at the yen, oil, and equities, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And a quick peek, I don't want to steal Brian's thunder, but you can clearly see, I mean, the yen is, the pound yen is taking off. That is, the yen is in the second position. So it is showing weakness. It's getting hammered. But we're going to see that across the board on the yen, which Japan seems to like for their exports. All right, Brian, I'm going to flip it over to you and let's quickly run through because there isn't really a whole lot of headline news, if anything.
Mm-mm.
Oh, I've almost forgot. And tomorrow we do have the before Brian and I start I think it's before we start the euro. The ECB is going to come out with their policy statement. While we don't expect
Tomorrow.
any move, it's tomorrow morning.
Yep.
We don't expect any move. They are going to come out with a statement on the next one. So we could see some volatility there if they are going to come off a zero. We'll see. We'll see what's there. So want to make sure I threw that out there. All right, Brian, it's all you. Sorry.
There's my thunder and lightning. Gone right there. That's it. I got nothing, guys. I'll see you tomorrow.
Yeah. Well, we got the
Yeah,
charts. We do want to take a
yeah,
look at those technical
yeah.
levels.
There's really not much out there in the overnight. You can see there's a lot of like no color, a lot of yellow. Again, obviously the yen is continuing to slide a little bit. Now, it is interesting the fact that, and again, those are the biggest movers. The dollar yen 159, pound yen 250. Again, larger than an ATR, but it just shows you what that pair really can do. And it's crazy too because you're seeing the euro pound is actually up 28. You would say, well, wait a second, is the pound weak or strong? I would say it's more kind of neutral, and the euro again is bracing for the statements for tomorrow morning. The pound is up versus the dollar, but you're seeing like kind of dollar strength for the most part, except versus the CAD, and that's because oil is still continuing to go higher. But 250 is a big amount. Now, besides that, there's really nothing. 135 is the magic number for the dollar yen. We're actually within striking distance of that right now because it's moved up so much over the last 2 days. And again, that's currencies that can happen. So yes, Japan typically does like it, but at 135 is when it actually does start to become a little bit of an issue for them. But remember, this is foreign currencies. They're talking about inflation holding at 2% at any moment in time. And if there's any country that does this on a not regular basis, but the least shocking nation to do it, it would be the Bank of Japan, kind of intervening in the market. And all they would need to do is raise it 0.1%, or maybe a 0.25 or something like that. Just something small enough. And that skyrockets at the end right back down again because they've been telegraphing that, no, we're going to stay extremely weak, extremely weak, extremely weak. It's good for us. Great. All they need to do is say, okay, it's a little bit too weak now. Bam. And they've already said if it gets too bad, they'll just raise the interest rate a little bit. And that kind of that adjusts everything all over the place. And if they did, right now until the European Union raises it, that actually puts Japan ahead of the European Union. It'd be really, really strange to have like
a reverse carry.
Yeah, having a New Zealand euro currency pair be the carry trade would be really funky. That would be really, really strange. But who knows? But I will say, and again, that's where kind of all eyes are looking, and that's why you're seeing European strength right now. The data that we've gotten in the overnight, they're not great. Industrial production month over month in Germany. Again, they expected it to be much better, and we've had disappointing data yesterday too with that. Also, not as good as expected. Trade balance also bad. Again, getting higher. Retail sales, flat, nothing. Remember, they were negative last time. They expected to be just slightly positive. Nope. Still holding that lower rate, right? And then some of the GDP numbers were a bit better. I love how the revised, right? They have the final employment change number, which is a little bit better. The revised GDP, it's like, wait a second. This is like, okay, here's our GDP, and they're like, all right, let's get the last little like mail-in ballots, and magically they were able to double it. So kind of like in my time in trading, not that like, I mean, there are obviously people with a million times more experience than me. I've never seen a revised number come in that much different, like double the amount. So we'll see. I mean, I don't know if it's a counterbalance this or what, but tomorrow morning is where the kind of the big aspect, the big change. And again, they're not changing anything, but all they need to do is say, "Yup, we're going in July." Based off the data, it looks like it's a 0.5, and boom, euro's going to shoot up tomorrow. So it is at 7:45. It is kind of a strange time, but remember, you can trade the euro dollar, even the euro yen. And because it's a news release and it's before the U.S. market, remember, Nadex contracts are based off of U.S. Futures volatility. There's not a lot of volatility in the market at 7:45 in the morning, so there tends not to be as lot. Tomorrow, watch, there will be because we're all going to be looking at it now.
Right. It's because
Again,
that's all there is.
7:45 number. Yeah, 7:45 tomorrow morning. Again, there's not a lot of trading out there. Use the shorter duration contracts. You don't need as much of a move, and them confirming that, yep, we're definitely raising it. Everything looks good. We may do another raise after that. Any type of hawkish thing that brings euro strength in. Now the euro is rising right now, so again, typically when you see that before action movement, the fact that it's at 7:45 is really cool because typically what happens is you see that movement before the news release comes out. Well, guess what? The European session opens at 3 o'clock in the morning, so there's almost 5 hours, right, of movement, positioning it for that statement to come out. Their policy statements are just like ours. It's not like the first time it's ever being read is when the release is there. There are probably people that already know exactly what they're going to say. There are speechwriters, and people will leak that data. It's money. Trust me. If there's money, there's corruption. People know. So there will probably be some type of telltale sign to figure out where it's going, what's priced in, what's not priced in, and that'll be tomorrow morning. So the big news we have this morning, I don't want to say big noise, but obviously oil. We have crude oil inventories, and we're expected to have a minus 2.6 million down draw. Now, the API report overnight actually showed that they were expecting only a 1.8 and actually came in on a positive number on a good side. I will say the gas station yesterday that I was complaining about yesterday that was 508. Last night it was 504. So gas is moving in the right direction. It's only $5.04 now versus $5.08.
I can't believe they actually dropped it 4 cents.
4 cents, I know, right? Well, I mean, oil dropped down yesterday just a little bit, like $1, so they dropped 4 cents. I mean, that's how it works, right? $1 in the price of oil makes it move 4 cents down, but if it goes 5 cents up, it's going to,
right.
We'll see. But again, that'll be oil. Right now, again, we'll start with oil real fast. We're holding, and we were kind of getting kind of an expanding range on that one. Again, oil's, with everything that we've heard, oil is continuing to press higher as we're seeing demand come back. And again, a lot of this too is Saudi Arabia said, yeah, the demand's there. We need to increase it. That kind of justifies that, yes, the demand is increasing, but the amount of supply, we don't really know. OPEC is holding them back. We really don't know. Again, China doesn't kind of foreshadow. They don't kind of give us all this data. But again, we're not hearing more about lockdowns now. We're hearing that them releasing the lockdowns, which is opening that kind of demand kind of, I guess, bottleneck is what they were talking about. So I think this goes higher. The big question is who takes note of this? I was telling Todd beforehand, I don't listen to MSNBC, but, my phone gets Yahoo updates on finance and things like that because I guess I hit enough finance websites. And there was a person that was asked about who they're voting for, whether the prices now are going to change their voting habits. And everybody knows this, and we've mentioned it before on the channel, that people do vote with their wallets. And the guy said, yeah, the prices are double what they were with the previous president. So I don't it doesn't matter to me that, And the reporter's like, just like that, that's it? Because it's this much. He goes, it's hurting my family. Yes. I was like, woo. So that's actually a good thing if you want gas prices to come down, because trust me, politicians are looking at that. They know that. Question is, what else can they really do? Slapping a solar panel to every car is not going to be that answer. I think it absolutely has to be done. 100% on board. I'm glad that they finally are putting money towards that because I think that's where we need to go, but it doesn't solve the problem right now. So we'll see. I think 1030 will be a nice one. Again, drop that down, use the 35-1 strategy, see where price is moving ahead of time. The Europeans have kind of sent it up, but it's not really out of the range. It's still in that same area, this 120 to 121 area where we were expecting sellers to kind of come in. And it's probed it a few times and push back. But right now, they're looking at having a big surplus. If it comes in as expected at 2.6, you may say, well, wait a second. Is it going to be a big mover if it comes in as expected? because the market priced that in. It really depends on kind of who's looking at this number, because now the market is saying, well, wait a second, there should be a surplus. If there's not a surplus and it does come in as expected, that could lead us for another pop up today. I hate to say it again, natural gas is also higher, but it's not really out of the range. It's literally just jumping back and forth. It's holding at 940. It's not up at 10 yet. Again, tomorrow is the inventory report for natural gas. And again, one of the biggest driving factors obviously was the war. It's been really, really quiet. We haven't heard much. It's kind of, the headlines have kind of, they've kind of dissipated. Not that things aren't happening. I mean, people are still losing their lives, and bodies are being returned that have been found. So it's still going on, but we're hearing less and less headlines about it. I think people, the news stations are realizing that people are losing their appetite for it. The problem still exists. Gold and silver, same thing, just chopping back and forth. Gold's actually at 0.01 or 0.02 up. It's just chopping back and forth between the 50, 23.6. Silver taking a little bit more of a drop, but again, using that 20, it's kind of going lower, higher, lower, higher. The currencies, we talked about that. Just to give you guys kind of an idea, we can keep raising this up. 135 is the big number here, and that number is sitting right there. So we're getting within very, very close proximity. I'll change it to black so it's easy to see. That's when we're going to start hearing some major headlines, and that, I would say, in the next 50 pips is probably when, if there's going to be an intervention, there will be. Pound yen is another one. I'm going to raise this higher. Yesterday, we talked about 2 potential selling levels. You can see it literally slammed into the first one and then spent 5 hours fighting, and then went up to the next one and then spent about an hour and a half again in this session fighting that level, right? Trying to get through those sellers. If I scroll it forward, you see this area up here. We talked about 170 is where the potential target is by the end of the week, and we're close. Up 255. The next 255 brings us to here. So we are literally one day from breaking 170 in the pound yen. And again, it's been a long, long time. The euro yen is another one, particularly because we're seeing massive amounts of yen weakness. We're also seeing massive amounts of euro strength. They say something hawkish tomorrow. The next level, and this is kind of crazy, the next level is 240 pips up. That happens to be a daily level from 2014. So we got a lot of room to run on this one. But if you think about what's happening, we think that they're going to basically affirm that they're raising. They mentioned that 0.5 because yesterday, remember, it was going to be a coin flip. As soon as that starts to go down towards the 0.5, it's like, this is awesome, right? So it could give us a nice little, again, this could be our profit target for tomorrow, coming out with that news at 7:45, 146.50. So a lot of cool stuff there. As far as the indices go, right now, VIX is up. But again, yesterday we talked about it. There was no news. There was no headlines. It should deteriorate. And it did. The VIX just absolutely fell through the floor yesterday, which gave us those rallies. Dollar's not doing much. ES, I will say, ES, we talked about 1030 reversals. You can see it literally came up and grabbed that first zone. I'll drop it down to 15 so we can see it a little bit better. Came up, grabbed that first zone, did its pullback, and again, 1 to 3 on the way down. So we can delete that one. Came back down and ended up grabbing another level. You can see right now it's kind of using this basing level, the second area. It hit it and kind of rolled back and then kind of went through it. It came all the way up and it did grab the 41.61. As you guys can see, we drew that yesterday. That was an easy top. It was from over here where it was confirmed, and then it got confirmed the second time. It gave us a base and a nice push, so we were looking at it. And then ended up triggering off this zone at what? Like right at the end of the day. Talking about like 3, 4 o'clock right at the close. It's pulled back from that level and it's pushed back down again. Right now, in the grand scheme of things, it has gone up. It has hit the 78.6, so we need to remove it. And if we flip it around to kind of take advantage of the low and the high yesterday, you can see right now that there's a level of basing sitting right here. And you'll also notice that we've hit it, we've hit it, we've hit it, we've hit it again. If it drops, there is a 15 to 61.8, and right now the 61.8 is down here, kind of where the last area is. I would say that there's probably a short in here. If we're able to break through pretty decently, 1 to 3 is right there. Technically, our profit target should be sitting right there. So just at the very, very end of it. Oops, I don't know what I did with that one. I have to figure out what that click was. Anyway, I think there's something in here. Again, a little bit of a racetrack if this negativity exists. NQ, kind of the same thing. A little bit, not quite as clean. And again, we talked about 1270. It popped through there yesterday at 4 p.m. And then again, sideways, but you can see that the highs are coming, the highs are getting lower and the lows are getting lower. YM, also the same, came back up, ended up breaking through and grabbed this top level. We had it marked off. And again, 1030, we reversed off of this. Again, gave us that nice move. Came back up and did the same thing at 4 p.m. at the close and has done nothing but kind of push back down. I will adjust this real quick and we'll put it down here. Kind of the same thing. Old level, right? sellers became the buyers, then hold, and we're starting to break through. Let's see where the 50 is on this one. Yeah, the 50 is a little bit farther down. Again, the 61.8 seems to be the turning spot right down here. So a little bit more room to run to this one. And Russell, we mentioned yesterday that Russell had the best opportunity to be in long. Again, it looked good in the morning. It was pulling back down to a level. We talked about the 50% traders. And again, slammed off of it, came back up, grabbed that trade, pushed down, made it 1 to 3, and then kind of peaked in the overnight as we pushed back up again. Again, you can see the last sellers where that pullback happened, also right around the 50% retracement level. So they're all about the same. And again, all I'm doing is extending this across. It's the same level, kind of the same base, the same drop. So if they turn negative, and right now it looks to be risk off, all the cryptos are down as well. Bitcoin, again, taking those major hits from yesterday and driving lower. And again, we're not getting any help from the dollar. And if the VIX continues to raise, not that there's a lot of headlines, but again, 2 days, people are like, I gotta get in, I gotta do something. So all preparing for tomorrow's ECB press conference on monetary policy.
Yeah.
So
now
that's it for today.
we did get one question because we do have the big number is Friday, the CPI numbers, and I do like this question. It's a good question. Is if you're looking at something, what asset class? Where can you be looking to trade
all of them
around?
this week because all of them this week because if you raise interest rates, that leads people more into the recession aspect of things. Seeing a high CPI, meaning that the Fed's kind of current, I don't want to say word, but their current policy, their current policy is not working, which means they need to raise interest rates at a higher rate. Because remember, the one way to control interest rates is to rise it, to raise interest rates to kind of have companies slow down, that signal a recession's coming. But at the same time, if you're raising interest rates, the way that you do that, that brings massive amounts of strength for the dollar, right? So right now, it's kind of cool when you're talking interest rates because you're talking all the Forex market, anything, again, euro dollar, pound dollar, dollar yen. And again, dollar yen has the ability to surge higher. Aussie dollar in particular, because again, as inflation is getting higher, that's more reason you got to kill inflation, right? You got to get rid of it, which also hurts gold, which also hurts the Aussie. So the Aussie dollar is directly in play, probably one of my favorite right now to look at. But at the same time, raising interest rates hurts companies, and that should make all the indices go down.
Indices weaker, right? So there's your answer in a nutshell.
So everything.
It could be an indicator for weak equities, although the question then is, have people already baked all of this negativity in? There's such a massive negative sentiment, or is there more to come? And don't know.
Hey, Jamie Dimon said what? A hurricane?
A hurricane, yeah.
A hurricane. He said a hurricane is coming for the economy. So if he is correct again, I mean, I hate to say again, but if he is correct again, and that 0.7 number is real,
so
we're in for a ride. So
it could be equities, so equity indices, and then certainly the foreign exchange market. If the Fed starts raising interest rates, you see a stronger dollar against.
And remember, right now the Fed has everybody believing that we're they said this. Our goal is a soft landing. That is their goal. How often thus far has the Fed hit their goals?
Like an egg dropping out of a 8-story window and hitting the cement.
Yes.
It'll be soft.
And again, remember, a lot of what they say is so we don't just all of a sudden have mass panic selling. But their goal is a soft landing. They don't know if they can create it. And if a CPI is accelerating and it's over double and it is that 0.7 like the forecast is, doesn't matter if it's forecast. The average person is not looking at this month over nothing. We're going, 0.7? Oh, is that came as expected? That's a lot. That means the Fed, they've raised it twice and it's not working. We're surging again. We're at a new 40-year high after you raise interest rates twice. That means that the soft landing is probably disappearing and they're going to have to go hard because, as I said, we have gas over 5. We have inflation again at 40-year highs. They've already taken policies. It's done nothing yet, and they've already made comments. We may have to put us into a recession to get this to stop.
So, we will see. So Friday's interesting. By the way, we did get a question. Where do you find all of our recordings? We record all of these sessions, and we record all the webinars. You'll find them on the Nadex YouTube channel. I would suggest that you subscribe to the Nadex YouTube channel. You'll get alerts when new stuff is put up there, but then you can always go back and find all of our recorded content, including these sessions. All right. With that, any questions for Nadex? Please email us, customerservice@nadex.com. You can email both Brian or me, or me. My email address, todd.rich@nadex.com. Brian's email address, support@keeptradingsimple.com. Yeah, I was just gonna say, I'm not gonna even recap everything. We're just seeing equities looking to open in the red. We've seen that this week repeatedly, but then close higher. Seeing some action though over in the yen with yen weakness. So that's where we're seeing some volatility in the markets. And we also have that oil inventory report later this morning.
10:30.
With that,
Yep.
Brian and I will be back tomorrow morning. We will have already heard from the ECB by then, so we'll be able to do some analysis around what they said and how the markets moved. So please join us tomorrow morning for that. We will definitely be diving into that then. And until then, good luck in the markets, everyone. Thank you so much for joining.